We're talking about commercial real estate with Peter Slayton. Hello, Peter. How are you?
I'm fine. How are you?
Good, good. Peter, you've been following commercial real estate for some time, and I know you've been tracking what's going on right now in the market. And I hear you have some new information you can share with us about the state of the commercial property market.
Yes, we know that through data compiled by Real Capital Analytics, a research firm in New York City that I work for, that there have been, we've uncovered $30 billion in troubled assets in the U.S. so far. So far. There's another $80 billion in potentially troubled assets. By troubled, we mean these are assets that are already in foreclosure or in some stage of foreclosure or taken back by banks and they're real estate owned. This is all commercial property. We're not talking about single-family homes or single condos. We're talking about office buildings, industrial properties, multifamily assets, shopping centers, hotels.
And this is really, I mean, we're just really at we could be just at the beginning of this. We haven't really seen real damage in the commercial property sector in the way we have in residential, have we?
Not that way, but commercial property in this case has lagged residential, but we'll see the same thing happen, which is that buyers of commercial property leverage to the hilt. You had the commercial version of subprime lending, basically, and buyers leveraged to the hilt. They did so using projections of increasing rents at vast clips a year, and of course the increased rent didn't materialize. Now we're having tenants are pulling out, releasing is not proceeding apace, and at the same time property values are falling. So owners of commercial property are in the same position that residential owners are in. They have debt that's worth more than their properties, and banks, of course, as you know, aren't lending. If you want to refinance a loan, you can't. It's very hard. There's very little financial lending out there.
And very quickly, how big could this problem get?
This could get big. It is big already. $30 billion is nothing to sneeze at. Certainly could double this year, and it could potentially go to 100 to $200 billion in troubled assets.
Well, that's good news.
Yeah.
Thank you very much. We've been speaking with Peter Slayton on the MoneyShow.com video network.